Welcome back to the Deep Dive. Today is Thursday, February 12th, 2026. If you've walked into a Sephora, scrolled through TikTok, or frankly just looked at a billboard in the last 6 months, you've seen it.
Oh, it's unavoidable.
It's this absolute explosion of K-beauty. It feels like every single week there's a new brand that nobody had heard of a month ago, and suddenly they're doing millions in sales.
It's a global dominance at this point. This has moved way beyond just being a niche trend. I mean, it is reshaping the entire global cosmetics infrastructure.
Exactly. And you've got these massive hits, beauty, of Joseon, Torridon, Medicube, Ramen. I mean, they're everywhere. But here's the hook, and this is what we're really unpacking today because it blew my mind when I went through the research.
Right.
Most of these massive brands, they don't own a factory, they don't mix a single chemical, they don't even have a lab.
That's right. In many cases, they are purely marketing and concept houses. The actual liquid that's in the bottle, the R&D, the safety testing, all of it is coming from somewhere else.
And that somewhere else is the subject of today's deep dive. We are looking at the hidden giant, the engine room behind this whole K-beauty revolution, a company called COSMAX.
Ticker is 192820 on the Korean exchange.
Yep. Looking at the boards today, the stock is trading at about 209,000 Korean won, which gives them a market cap of roughly 2.37 trillion won. Now, I know what you're thinking. Manufacturing, boring, low margins.
Heavy machinery.
Yeah, exactly. Which is, the standard view, and honestly, usually the correct view. Factories are capital intensive. They're really hard to scale profitably.
We are.
But the research we have today paints a completely different picture. The analysts, the sources, they're all arguing that COSMAX isn't just a manufacturer. They're calling it a platform company.
Which is a bold comparison.
It is, but the argument is that this company is effectively the cloud server for the entire beauty industry.
And when you look at the data, it really holds up. COSMAX has, it's effectively lowered the barrier to entry for new beauty brands to almost zero. They're transitioning from just being a pair of hands to being the actual brain behind thousands of these indie brands.
And financially, it seems like 2026 is shaping up to be a massive pivot year. We're seeing their U.S. operations, which, I love this, the reports dramatically call it decade of cruelty.
Yeah, it's a great line.
They're finally turning a corner.
I
want to get to that decade of cruelty because the numbers are wild. But let's establish the business model first, because I think there's a huge misconception here.
Okay.
If I say contract manufacturing, most people think of a factory where I hand you a blueprint and you just, build it for me.
Right. That's the classic OEM model, original equipment manufacturing. You bring me the recipe, I cook the meal, I don't ask questions, I just execute. I'm a pair of hands.
But COSMAX operates as an ODM.
Correct. Original development manufacturing. And the distinction is night and day. It's a huge difference.
How so?
In the ODM model, COSMAX is the one writing the cookbook. They proactively develop the formulas, the textures, the delivery systems, and even the concepts. Then they go to a brand or sometimes even just an influencer and say, here is a market-ready product. We have the data. Put your logo on it.
So wait, let me play this out. If I'm a beauty influencer with 1 million followers and I want to launch a glass skin serum, I don't need to hire a chemist.
You don't even need a lab coat. You go to COSMAX, they'll present you with options from their library, you pick one, maybe you tweak the scent, design the bottle, and you're live.
Wow.
This is why COSMAX calls themselves a barren enterprise and a technology company, and honestly, they kind of earn that title. They're doing all the heavy lifting on the science side.
Which explains this flood of indie brands. I mean, historically, if you wanted to compete in beauty, you had to be L'Oreal or Estee Lauder.
Yeah.
You needed huge capital for R&D.
Exactly. The incumbents held all the cards because they own the science. But COSMAX basically democratized that science. So now, a small team in Seoul or LA can launch a product that is chemically identical, or sometimes even superior, to a heritage luxury brand.
The data on their client base is striking. Out of COSMAX's top 20 clients, over 50% are now these indie brands.
And we're not talking about tiny startups. These are companies doing hundreds of millions in revenue, and that client diversity, that's their safety net. They serve over 4,000 brands globally.
Okay, but the real insight here, and what investors should focus on, is this idea of the profit pool analysis. Let's unpack that.
Right.
Because usually we assume the brand makes the big bucks and the factory just gets the scraps.
On the surface, yeah. But you have to look at the risk profile. A beauty brand is fighting a brutal, brutal war. Customer loyalty is lower than ever. Trends shift overnight. Marketing costs are just astronomical.
They're paying Instagram, TikTok, Amazon ads.
All of it. So their margins are theoretically, let's say, 15 to 20%. But that gets eaten alive by customer acquisition costs. So the brand is taking all the market risk. If the influencer gets canceled, the brand dies.
Right.
But COSMAX, they sit right in the middle. They own the prescription rights, the actual formula. So whether brand A wins the marketing war or brand B wins, COSMAX gets the production volume either way. They take a stable 10 to 15% margin.
It's the classic selling shovels in a gold rush.
It is, but with a high-tech twist. They aren't just selling shovels, they're designing better shovels that nobody else even has the blueprints for.
Which brings us perfectly to the moat. In our research notes, there was one number that just jumps off the page, and it just screams, tech company.
The recipe database.
600,000. 600,000 prescription recipes. That's a staggering amount of intellectual property.
It's massive, and you have to think about what that database actually represents. It's not just a list of ingredients. It represents speed. And in the beauty industry right now, speed is the only metric that really matters.
Okay, so how much of a difference are we talking about?
Well, standard R&D for a new cosmetic product, starting from scratch, is usually 6 to 12 months. You have stability testing, microbial testing, patch testing.
All that stuff,
You have to make sure the emulsion doesn't separate after 3 weeks on a shelf.
which is a lifetime in the TikTok era. By the time you launch, the trend is already dead.
Exactly. But because COSMAX has this huge library of pre-tested, pre-approved formulas, you can think of them like Lego blocks, they can cut that time down to just 3 months.
So they're just pulling a proven book off the shelf?
Essentially. Take Beauty of Joseon. Their Relief sunscreen is a global mega hit. They didn't spend 3 years in a lab inventing some new molecule. They worked with COSMAX to sample existing, superior formulas, optimized one for their brand concept, and got it to market while the demand was red hot.
That creates a switching cost, doesn't it? If I'm a brand and I hit a home run with a COSMAX formula, I can't just take that recipe to a cheaper factory next year.
No, you can't. That formula is COSMAX's IP. You are locked in. If you leave, you have to change the product, and your customers will notice, hey, the texture changed. This smells different. That kills brands.
So they stay.
They stay. That is a massive economic moat.
The sources also mention they're integrating AI into this. Smart color AI. Is this just a buzzword, or is it actually doing something useful?
It's surprisingly functional. Think about foundation or concealer. Matching shades is incredibly tedious. It requires a lot of manual mixing and sampling by human technicians.
Right.
This AI automates that color matching process. It cuts down sample production time drastically. So again, it's all about reinforcing that speed advantage.
Okay, so they dominate Korea, they have the data, the indie brands,
Mhm.
but we have to talk about the elephant in the room. Or I guess the elephant that was in Ohio.
The U.S. operations,
Yeah.
the decade of cruelty.
That is just such strong language for a financial report. What exactly happened there?
It was a classic case of overambition meeting bad timing. Back in 2014, COSMAX wanted to conquer America. It made sense, strategically. So they bought a massive factory in Ohio that used to belong to L'Oreal.
Sounds like a good move on paper. You get instant capacity.
On paper, sure. But the reality was messy. The facility was old. The capacity was way, way too high for the demand they actually had. They were paying to heat, light, and maintain this massive building that was mostly empty.
Oh, man.
They burned cash for 10 straight years. We are talking about cumulative deficits that were dragging down the entire company's performance.
That is painful. Investors must have been just screaming for them to cut it loose.
They were. But the turnaround story, and why we're talking about this today, in 2026, is that they finally bit the bullet. Between 2022 and 2023, they made the hard call to completely close the Ohio factory.
They shut it down.
Shut it down, took the write-offs, and they consolidated everything to their other factory in New Jersey, which is known as New World.
And what was the impact of that?
Immediate relief on the balance sheet. They cut their fixed costs by over 40%. And now, looking at the forecast for the second half of 2026, they are projected to finally hit the break-even point.
That's a huge psychological milestone for the stock.
It's huge. And in manufacturing, we talk about operating leverage. When you're losing money, every unit you sell just reduces the loss slightly. But once you cover your fixed costs, once you pass that break-even point,
The curve bends upward.
exactly, every additional dollar of revenue flows almost entirely to the profit line.
So the U.S. goes from being a money pit to a potential profit engine.
Yeah.
What are they actually making in New Jersey then? Is it just more lipstick and eyeshadow?
No, and this is the strategic genius of keeping the New Jersey plant. The focus is sun care,
Sunscreen.
specifically FDA-approved sunscreen. And this is a crucial nuance that a lot of people miss. In Korea or Europe, sunscreen is treated like a cosmetic. It's relatively easy to launch. But in the US, the FDA classifies sunscreen as an over-the-counter drug.
Oh, right. So it's regulated like Tylenol or ibuprofen.
Precisely. You need serious certification to manufacture it. You can't just mix it in some warehouse. You need audits, specific protocols, rigorous testing, and COSMAX's New Jersey factory has that FDA certification.
So all those Korean indie brands that are blowing up, they can't just ship their Korean sunscreen to Target in the U.S.
Not easily. They face massive regulatory hurdles. But if they work with COSMAX, COSMAX can manufacture it in New Jersey under FDA compliance. So COSMAX becomes the gateway to the U.S. market for these Asian brands,
And the sun care market is just exploding right now.
growing at 80%. Western consumers are finally catching on to daily SPF usage, not just for the beach. And COSMAX has set up a sales office in LA to aggressively court those West Coast indie brands.
Right.
They're shifting their mix from lower margin makeup to high margin skincare and sun care. Right now, skincare makes up about 48% of their U.S. mix, and that number is climbing fast.
Okay, let's look at the global map then. Where's the money actually coming from right now?
Korea is still the mothership. It makes up about 65% of their revenue and generates operating margins over 10%. That's the cash cow. That's what funds the global expansion.
And China. I know that's always a tricky market for Korean firms.
It is. China's about 24% of revenue. They have operations in Shanghai and Guangzhou, but they're being very smart there. They're using what they call a low-cost strategy, local to local.
Meaning.
They're sourcing local ingredients, hiring local management, manufacturing locally, and selling to local Chinese brands. They're trying to insulate themselves from any geopolitical tensions. They don't want to look like a Korean importer. They want to look like a Chinese domestic partner.
And Southeast Asia.
Indonesia and Thailand are growing, but there's a risk there. The sources mention that low-cost Chinese competitors are entering those markets pretty aggressively. So while it's a growth area, it's also becoming a battleground on price.
Got it. Okay, let's talk hard numbers. 2026 financial forecasts. What are the analysts expecting?
For 2026, the projection is revenue around 2.7 trillion won, with an operating profit of about 232 billion won.
And the valuation. We said the stock is at 209,000 won. Where does it put it?
It's trading at a price-to-earnings ratio, a PER of about 14 to 15 times.
Can you contextualize that for me? Is that cheap for a tech platform?
It's very cheap for a tech platform, and it's even cheap compared to its manufacturing peers. Intercos, the big Italian competitor, trades at higher multiples but is growing slower. Even CNC International here in Korea trades higher. So yes, COSMAX is trading at a discount.
Why? If they have the recipes to turn around the growth, why is the market discounting them?
Well, that brings us to the elephant in the room, part 2, the IPO risk.
Ah, the spin-off fear.
Specifically, the potential listing of their Chinese subsidiary, COSMAX East. Investors are terrified of something called double counting.
We see this a lot in the Korean market. Can you explain it for the listener who might not follow K-stock drama?
Sure. So if COSMAX lists its Chinese unit as a separate public company, the fear is that the holding company, the one you and I would buy, COSMAX 192820, loses value.
Because its most valuable asset is now trading on its own.
Exactly. Investors think, why buy the parent when I can just buy the child directly? It creates what's called a holding company discount, and investors hate it.
It feels like the value is being stripped out of the company you own.
Right. However, there is a strong rebuttal in the sources. In November of 2025, COSMAX announced a corporate value-up plan.
Which usually sounds like corporate fluff. We value our shareholders.
It can be, but they put real numbers on it. They're targeting a return on equity of 20% and, crucially, a shareholder return ratio of 30% through 2028.
30%. So dividends and buybacks.
Yes. They are effectively paying investors to wait out the risk. They're saying, stick with us and we will give you cash. And honestly, looking at that PER of 14 times, the market has likely already priced in that IPO fear. The bad news is already in the stock price.
So if the IPO doesn't happen or if it goes better than expected, there's significant upside.
Exactly. You're almost buying the U.S. turnaround for free.
Okay, so let's pull this all together.
Yeah.
We have a company that's like the Foxconn of beauty, but with more design power. They build the products for the brands everyone loves. They have a massive data advantage with these 600,000 recipes. And 2026 is supposed to be the year the U.S. operations stop bleeding cash and start making money.
That's the summary. It's an investment thesis that's based on the fragmentation of beauty. If you believe that small, nimble indie brands will keep stealing market share from the giant conglomerates, COSMAX is the way to play that trend. Because COSMAX supplies the rebels.
I love that, supplying the rebels. Before we wrap up, I want to throw one more thought at you, something to make our listeners really think about the valuation.
Go for it.
We talked about the U.S. factory break-even, but analysts are usually conservative, right? They model for okay outcomes. What if COSMAX hits, say, 70% utilization in the U.S.?
Okay.
That would generate about 220 billion won in revenue just from New Jersey. The math on that, considering the operating leverage we discussed, the profit jump would be massive, wouldn't it?
It would be exponential. Analysts haven't fully modeled a home run scenario in the U.S. yet. They're just hoping for a no more losses scenario. If that sun care boom continues and that factory fills up, the earnings surprise could be shocking.
So the surprise is to the upside.
Definitely. And I'll leave you with this question. Is COSMAX a factory, or is it a data company that just happens to sell lotion?
The 600,000 formulas.
Exactly. Factories trade at 10x earnings. Tech and data platforms, they trade at 20x, 30x earnings. If the market starts viewing those recipes as a proprietary data moat, well, the valuation we see today at 209,001 might look very, very cheap in hindsight.
That is a fascinating lens, from a decade of cruelty to a future of data dominance. We will be watching COSMAX closely this year. That's it for today's deep dive. Thanks for listening.